Hi bro and sister and Christian. This is an example of trading the news, which is buying or selling something based upon breaking news, like right that minute. And in this particular case, it's the Australian RBA, Reserve Bank Governor, Glenn Stevens, coming out to give a press conference today at 11:55 a.m. In actual fact, he released it a little bit early, a couple of minutes early. So I started this video a little bit late. You need a source of this breaking news, and I've subscribed to a service, a website which is its purpose is to give you this news right on the button. And I've put it in a red circle here to show you what it is. Now normally you would just see it flash on the screen, but in this particular case it's already there because I was a bit late, or it was a bit early. But you can see that the information is there. What you need to do is immediately kind of read it, digest it and interpret it, and then anticipate which way the Australian dollar in this particular case is going to go. Well, this way it would go down. That would be the prediction, and indeed it does. So what you do is you click on the sell button for the Australian US dollar, and then follow that on the chart, the chart being the of the Australian dollar against the US dollar, and I'll put a red circle around that. Actually, there are two charts there. One is a tick chart, which is in the middle, and it shows the sort of second by second change in the Australian dollar, whereas the other one, each one of those little red or green bars represents a 1 minute period of values of the Australian dollar. So you need those two. They're really saying the same thing, those two charts. So one is, they're just giving a different angle on the same thing. So what you need to do is get in, having sold, having pressed the sell button. You need to then ride the wave of selling and get out when before it turns around and starts going up again. So now I'm going to replace the left-hand screen, which is the news release screen, with the buy and sell button screen, where I go to my account, my Forex account, where I've got some money and I can buy Australian dollars or sell them. That's over here on the left. You can see me pushing the sell button here. Then just below the buttons is a line that lays out all of the numbers involved in my position, my open or active position. Notice that there's immediately a loss on my position, because that's the commission or the spread that the company takes in order for me to open this position. But as time goes on, it becomes less negative and then turns positive, because this is a winning trade, and I'm starting to make a profit now. The $20 number represents the margin, or the amount that I'm risking in this trade, or the amount of investment that I'm putting on the table. And I've deliberately made it pretty small because I'm still just practicing, and it could easily be cranked up to $1,000, for example, in which case the profit is multiplied by that same factor. Of course, so would the loss, but the idea is that the chances of a loss is much smaller than the chances of a profit in this kind of trading. So let's get back to the trade and see how the profit and loss pans out over time, and how that's connected to the charts, which tells us when to get out. Remember, we've sold the Australian dollar, so we want it to go down. The more it goes down, the more profit we make, which is weird, but that's the direction we've traded it in. You can see the dotted line on the map, on the chart. That's our break-even point. So we're in profit now because we're below that dotted line. So far so good. So let's check out our profit and loss situation. So you can see it to start to roll over now, and on the charts it's a bit clearer. So this is when I kind of pulled the plug on this trade very soon and got out with that profit. There we go, 93 cents. Now that doesn't seem very much, but in against the amount risked, it's actually very good. Also, I'm misrepresenting that $20 margin amount. That's not really the amount that it is at risk. It's much less than that, because you can see that it's the profit kind of built up over a period of time. Well, any loss would also take that amount of time to accumulate, and you could get out, you could cut your losses much earlier than that. And also, given that you've got the wind behind you with this news release in your favour, it's unlikely to go too much the other way, if it's going to go the other way at all. So that $20 is really just represents the amount you have to have in your account in order to make this trade. So that if you had 2,000 or 10,000 or 20,000 in your account, which you could build up over time, not unrealistic, I've done it before, then the profit would be $1, not $1, but $100 or $1,000. The main thing, in my opinion, is to get a high win to loss ratio, like 9 out of 10 or something like that. And if we can build up that kind of hit rate, then we'll be laughing.